Welcome to Beers with Contractors.
All right, tradies. It's another episode of Beers with Contractors. Look who I have in the studio today. Terry, do you know who this guy right here? Terry, our 5 to 6 listeners have been missing you so bad. I seriously, to make you feel better about yourself.
I need that help.
That was terrible to you. I met this guy this last week. He owns a spray foam company in Michigan. Okay. And he's like, yeah, man, I listen to you guys every week. I'm one of your 5 to 6 listeners. And he was like, where's Terry? And I'm like, well, Terry has a job.
Although it doesn't appear like that all the
time. Anyway, so now we got 5 to 6 listeners out there. They keep hitting us up. So you know some of the most frustrating things that happen with the people, keyboard warriors on our comments. Oh, yeah. You know who you are on TikTok and everywhere else. When I start talking about margins, like the internet blows up. It's like, no, you don't do it that way. You got to do markup. And I'm like, so this is for all of those out there. I've been waiting for this person for a long time. We've already been talking before the show.
We have.
Man, our guest today is a rock star, Shannon Weinstein. She's essentially a CPA and fractional CFO for Keep What You Earn. I love this title. It's like great branding. It's like, just say what you mean, right? So, but also, listen, 15 years, Big Four accounting and corporate finance companies, Fortune 50 companies, 50, removing some zeros. And also, she's got a cool personality. She's actually somebody you can get along with.
Nice.
Speaking of which, because you'll see she's even got her special beer with us today, but Shannon took experience and built a firm focused on bringing CFO-level financial strategies to small, growing service companies. She also is the host of her own podcast, probably much better behaved than us.
One we'll never be on.
You want to guess? Well, it's called Keep What You Earn podcast, not Drink What You Earn. And by the way, top 1% globally. So I feel like starstruck here. Shannon, welcome to the podcast. Cheers to you.
Thank you, guys. Cheers. Salud.
Yeah, man, I'm super excited. We have so many people that we both know that, you know, they're starting to build these businesses and they don't realize, like, where's the money at? And how much am I worth? And things like that. And that's what you fix. So obviously I gave a brief overview of your background, but like, let's dive in because you have carved out a very good specialty for home service contractors. And that was not mentioned here, but let's dive into how you got that kind of specialization.
Sure. So really, as all good things do, it happens by accident. So I ended up dating a guy a while ago who had an amazing basement waterproofing and foundation repair company out of Connecticut. And I got in there and, like any good accountant, was like, I ain't going to marry this guy until I see his tax returns. I went in there and I was like, what's going on with your books? What's going on here? And it was a total shit show. So I immediately was like, what are these cars garaged in New York that you don't have? What is your accountant doing? So, you know, pretty soon I got really involved in helping him with his business. He became my husband. His name's Shannon Weinstein. You guys know him. Yeah. And we saw all the way through. He exited in 2023 from his business, and we now live here in Costa Rica. You know, we lived here before, but now he gets to spend his time fishing and playing video games, doing whatever the hell he wants. So that's a function of really a lot of hard work and a lot of good planning. And I was like, let's see how we can help other people do this too, because that's what everyone deserves, is a good exit plan. And exiting isn't giving up. It's not, you know, it's not letting go of anything like that. It's really a victory. It's really the victory lap of, like, I built something worth something, you know, something valuable out of nothing. And most of the time we're bootstrapping and building it out of nothing. That's huge. So the more I can see other contractors, other service providers do that, I'll do that all day, every day.
That's awesome.
So Shannon, I know a lot of home service owners and contractors out there who are doing, you know, $5-10 million in revenue, but they constantly feel like they're broke. What is going on there? Why is that happening to them?
They don't know the difference between profit and cash flow. That's what's going on. So profit's an opinion, cash is a fact. Profit is what happens when you're running your business and what gets generated. So the net byproduct of you running your company and it generating profit. Because you guys know, if you're listening to this show, Will's probably drilled into your head that you have revenue minus expenses equals profit, whether it's gross profit or net. Now, infuse into that the timing of all of these things in and out of your bank account, and actually looking at your cash balance in your bank account and watching it fluctuate when you pay your credit card bill, when you pay off the loans on your equipment, when you take a distribution, all of those things, when you buy inventory, those things are not happening on your P&L. And so your P&L is only telling part of the story, the part where you're actually operating the business. What really matters is cash flow. And a lot of people underappreciate that term, and it doesn't get talked about enough. We hear about margins all the time, and that's really the functional operations. But at the same time, you can have great profitability and really, really crappy cash flow. And those things don't necessarily coincide.
Well, and that's funny you say that because, Shannon, we see it all the time where it's like, man, we killed it. And it's like, well, hold on, time out. And they're like, oh, wait a minute. Yeah, you're right. We don't have any cash. It's like, yeah, man, you got like 3 months of inventory sitting on your shelves. Like, why?
Yeah.
Well, we needed a discount. And it's like, why don't you fix the broken fucking processes first? Like, they're trying to save on materials when they could be saving on labor or auditing their marketing expenses and all sorts of things. But that kind of leads me. A lot of contractors, I mean, man, they look at their wins and losses through their bank account. They're like, oh, cool, I'm just going to log in and we're doing good. And they make decisions on this. So why is the bank account a terrible way to just manage the day-to-day for a contracting business?
I would say it's the same way as if you're trying to get healthy or lose weight. And you decide, I'm going to decide whether or not I'm healthy based on what I weigh on the scale Monday at 8 a.m. It is a snapshot metric, a point in time, and it will change the next time you use the bathroom. And that's true of your bank account too. So your bank account's constantly fluctuating day over day, hour over hour. And so when you look at cash in the bank, what you're not seeing is everything that's going to be coming in and going out in the next several days and the timing of that. So if you're collecting revenue on invoices, you're collecting your payments and your deposits now, but that's not until after, you're really not collecting a lot until after payroll runs. You could end up in a really cash flow negative position for a period of time until you recoup that. So you have to be in control of the timing of when you're collecting the payments in and when you're going to be paying your payroll, your loans, your distributions, things like that, and regulating that so that you're never really going to dip below a certain amount of cash reserve that you need in the bank. And you're never going to get stressed out because you're always going to have roughly a certain amount in there, or you'll know it's all part of the plan because you see it the next 6 weeks out and you're like, don't worry, we got this because billing's coming in next week. We're fine.
Yeah.
So Shannon, if you're going to step back and you're going to look at a business and you're going to invest $5 million in it, what are some of the top numbers that you want to see from that business before the owner has any ability to spin anything for you?
I would say, number one, margin by service line, no question. That's the basics of what is the profitability by service line. And along with that, the service mix. So are you making most of your money with the crappiest margin service? Not a good sign, because it means that you're not really creating sustainable profit. And by the way, the things that make you the most money don't always make you the most profit. So that's why it's really important to not get really kind of distracted by the vanity of revenue and instead be looking at, it's almost like food, where it's like nutrient dense food. You can eat the same number of calories out of a sweet potato or a Snickers bar, but at the same time, it's like, but one of those things is better for you. So you gotta be looking at revenue quality in terms of what is it generated from in your margin. And then the other thing I would look at,
the concept that she's throwing out these health food tips to two guys drinking beer at
totally
exactly.
You
know my audience, right?
She's probably got like a fitness consultancy firm under her umbrella, and she's like,
yeah.
Hey, I got 2 easy marks for you.
Yeah, her
there you go.
Well.
There you
Our
go.
customers are doing CrossFit. Sorry, I don't know what ours are doing.
That's right. There you go.
Yeah. But it's true. You have to look at your business's health, right? You have to look at that as a metric and as a benchmark for yourself. And I would say, so margin by service, number one, I would be looking at efficiencies. So I would look at efficiencies through different lenses. Number one is labor cost as a percentage of your revenue. How efficiently is time being spent? That's one of them. Another one would be your accounts receivable. So if you're invoicing and you need to collect, it's how efficient are you actually collecting and getting paid? What's the velocity that you're getting paid, and how much is just sitting there in I'm too shy to ask for my money bucket, and we got to be collecting that. And this shows honestly the strength of your processes. That's what it really comes down to. At the end of the day, the whole theme on this is strength of process and system that builds to a profitable business where I don't have to work that hard to make sure that this thing is churning out money. And I would say revenue and marketing spend by lead source, because this is another thing that I catch: a shit ton of marketing spend in all the wrong places.
Yeah.
But you're fooled by it because you're making money. So you're like, wait, I'm spending all this money on marketing and I'm making money. As a percentage of revenue, it's on target. Yes, but if all of your leads are coming from referrals, real estate, property inspectors, other things, if all of your referrals or your leads are coming from referral sources and other things, then is the money you're spending on ads really working?
Yeah.
So how is it working for you? What is it actually generating? So understanding that is key too. And then lastly, I would say, to my point earlier, net cash flow, not just net profit, but what do you walk away with at the end of every month in a net increase to your cash and the bank account?
And, Will, I think that's interesting concept, because I was talking with a neighbor of mine who's a small business owner, and he was talking about buying a spray foam rig, getting into that whole side of the business, right?
You'll find that fucking thing on Marketplace in 6 months.
Just to be honest, I gave your phone number out like it was like candy. Yeah, I was just like, call this guy. He has all the answers.
That's the spam calls I've been getting from that weirdo. Anyway.
But, it is honestly interesting, like how many of us out there in the world have said, hey, I can do that. I can add that service to my business without looking at everything she's talking about.
Yeah, but this is where the segue is this. Like, Shannon, your job, I'm sorry, your products and services at Keep What You Earn, they're hard edge. They're numbers. Like, you can't make up numbers. Like, they are what they are.
I mean, you could, but you'll probably be wearing orange for a while.
Yeah. And by the way, I think that's how she met Jason, her husband. No. But this is where, like, I think you would agree that these changes need to be made, but so many of these decisions, they're rooted by ego.
Yeah.
Like, chasing that top line and, no, I want to look good. I mean, that marketing example you gave before. Well, I'm making money. I'm a fucking marketing genius. Like, no, you're
It's
not.
working. What's working? I don't know. But
So
it is.
So in your process, your discovery process, I know you have to deal with this, but people that have worked with you love you. Like, how do you cut through that noise of ego with you and your team? Because this is like something that I feel like is your secret sauce, Shannon.
I tell the truth. Here's the thing. Okay, this leans into another analogy I have that you will relate to better than health, which is my sports one. No, my sports one. Here's
sports. I thought you were going to go into beer. Damn it. Yeah. All right, go ahead with your sports analogy.
No, my sports one. Okay, here's the thing. You're playing a game. I don't care what the hell sport, but you're playing a game. You got a scoreboard to Scorekeeper. Okay, the job of the Scorekeeper is to tell you if you're winning. Simply. I'm winning or I'm losing, a binary. Just looking at the score, I know what to do with that. The cheerleader is rooting for you to win and just, I don't know, standing in her corner over there and just cheering, rooting for you to win, hoping you win. What does the coach do? The coach is the one at halftime telling you where you fucked up and what you got to change if you want to win. So taking all that information and saying, okay, this is where you're screwing things up. This is where you got to improve. And this is what you got to go out and do next, or you're going to lose. And I always say, most of your accountants are scorekeepers. They are not coaches.
Yeah.
Most it'll work. And then you've got the CFO who's usually, unfortunately, the buzzkill I turn into. But at the same time, I think where we get by, and I would say our secret sauce in a way, is telling the truth in a way of this is what you need to hear. Everyone's going to tell you what you want to hear. I'm going to tell you what you need to hear because it's the truth of what's happening in the business. Because like you said, Will, the numbers do not lie. You can't make up numbers. And I'm going to tell you, this is what's going to happen if you keep doing this. And this is what you're going to expect as an outcome. So how do we want to change that? Let's talk about it. Let's figure out where the constraint is. Where are we leaking profit? Where's the best use of your attention and energy right now? And let's laser focus on that for a quarter and fix it. And then watch what happens when you do the next focus and the next thing and the next thing. Spoiler alert, it doesn't end. And there's always going to be something broken.
Yeah.
But you fix one thing, you break two. And you're going to go after the highest priority, highest value problem and allocate your resources, your time and energy better because you know where the biggest problems are. Because there's about 1,000 different things you could be doing as a business owner to fix things. But if you're tinkering around on a social media post when you really should be, analyzing your job cost and looking at your margins and looking at your inventory turnover, it's just better use of time.
So Shannon, it's funny you mentioned about sports. Like most of us as contractors, we're walking around not playing like a pro team. We're walking around playing like a bunch of drunk buddies in a softball league on the weekends. Thinking like, well, I'll figure it out, right? Well, we had a bad game, right? But, pro teams have a suite of specialists. They have the offensive coordinator, the defensive coordinator. They've got the analytics person. They've got the head coach. They got the assistant head coach. They got all these damn people. And it's taking knowledge base from all those specialists. And that's why you do bring that kind of blue collar approach. Because I've heard, we know some of your clients equally, and I love them to death. You know who you are, Josh Harper and Todd Amos. And they're not one of our 5 to 6 listeners. Josh is probably listening to a bench pressing podcast right now or something like that. I hope that comes out in short form for him. But
yeah, make fun of the guy that can kick your ass.
Love where this is going. Totally kick the shit out of me. He just squeezed my head with a headlock. But anyway, yeah, but I've seen you in play, and you don't pull punches, and it is cool to see. Because it's like, man, if the client doesn't like it, man, you ain't ready for the big leagues.
Yep,
you just ain't.
Yeah,
that's just what.
And I think it's ego. It's ego. It's 100% ego.
100%.
And when you fracture the ego, I think what ends up happening though is they come back around and like, you were right.
Yeah.
But I think in the name of trying to help the business and be a steward of the business's money, feelings might get hurt. But I've always said I would rather protect profit than protect feelings.
Mm-hmm.
And that's what I'm here for. If you want to protect feelings, that's the cheerleader. That's the, emotional support, whatever. And I'm not saying I'm rough around the edges per se. I'm just saying that I'm going to tell you the truth. I'm not going to sugarcoat too much of it because I want it to be clear that it's understood. This is what's going on. This is what's going to happen. And this is what you need to do about it. And take it or leave it, right? That's what it comes down to.
So let's talk about labor. And so if we're looking at employees, when does it actually make sense for an organization or a company out there to pay an employee more to be able to be profitable?
To pay an employee more in order to be profitable. What do you mean by that?
So if we have talent, right, and maybe we're hiring folks out there at a certain price point, right, for hourly wage, we could go out there and hire someone more or better. When is it going to make sense for us to do more? What are the metrics that we're looking at to get that return on investment?
All right, tradies, I know lead generation has been top of mind for all of us this last year and going into 2026. So let me put you onto a marketing team I actually trust, Greenbaum Steyer's Strategic Marketing Group. And oh yeah, they're friends and network affiliate of ours, but I'm telling you straight, these guys are different. Most marketing agents, they've never worn boots. They never dealt with seasonality, weird leads, price shoppers, no shows. Mrs. Johnson calling you back 3 times because her basement feels wet. Greenbaum Steyer's was literally born out of a successful foundation repair and waterproofing company like mine, so they actually understand how our businesses work. They've been doing this since 2017. They're a full service branding website. They convert with SEO, compounding over time, traditional media buying, and of course, lead generation that makes the phone ring. But the big thing is strategy. They're focused on helping you overcome what's holding you back, tighten up your systems, and hit real goals, profitable goals, and not just some vanity metrics and pretty reports that you can brag about at some conference. So if you're tired of guessing, tired of wasting money, and you want a team that knows contractors and knows how to drive results, go check out Greenbaum Steyer's Strategic Marketing Group. Tell them Will and Terry sent you. Their website's greenbaumsteyers.com. That's GreenBaumStiers.com. I'll put it in the link. Keep grinding out there, tradies.
Well, I would say you're looking at productivity, right? So you're looking at, I take pride in simplifying things, right? It's really simple to look at what can this person do with a week and what types of jobs. Are they the most profitable types of jobs? Are they, are they efficient with their time? Are they productive? And then look at this person and say, and you kind of have to look at a week in each of their lives. And what is that generating for me? And what is that costing me? And it's very clarifying. It's really not a lot of engineering or math. I mean, there's some math taking place back here, but at the end of the day, I just go practically and I actually like to ask the business owner this, where I just go like, choice between one or two. What do you want? Like, what do you prefer? Who do you prefer to work with? Right? Somebody who has the capability and less supervision, or somebody you have to supervise and you're going to have to grow. There's no wrong answer, but there's costs. So it's either going to be in the labor cost or in the time. So I have to look at, if you're choosing between these types of alternatives, what we do is we kind of project out, this is what they're going to bring in. And if you can accelerate some of that with a more experienced person, great, but is it worth their wage? That's going to be a very conditional case-by-case thing, but it's not a simple yes or no. It's usually, all of my advice is in the form of, if this is true, then this will be true, right? So if you ask me a question like, can we afford XYZ? Well, it's really not the question I'm designed to answer. The question I'm going to answer is, if you don't spend any other money on this, and this is what you want to do instead of XYZ, then yes, we can absolutely allocate cash to this. If you're willing to sacrifice this for this, or make this a priority, then yes, we can afford it. But if people come to me and say, can I buy another vehicle? Can I buy another vehicle? Can I buy another vehicle? I'll say, okay, like, can we afford it? Yes, that's not the question. Cash flow can handle it. Is it a good idea? Are you going to be too vehicle heavy? Do you have enough crews to support it? Are they going to be in operation? Are any of them going to be garaged at the shop for too long and not be revenue generating? So we have to be looking at all of those things in place too. Not just, can the cash handle the expense? To Will's point earlier, you're not just looking at the bank account and saying, can I afford it? You have to be looking out into, what is it going to do for me in the next 6 to 10 weeks or months?
Well, that's a perfect segue, because we've talked about the ego aspect. We've talked about, the hard truths that you deliver. When a contractor gets past that, and fitting for your title of your company, keep what you earn.
Yep.
What is a healthy amount of cash, now that we've dismissed the ego and everything else? What's a healthy amount of cash that a contractor should have for their operations? And also, like, how do you know when I can finally say, hey, can I take some fucking money off the table? I've been working my ass off. So what are your thresholds for that, Shannon?
Okay. So there are a couple of guidelines I follow. They're not going to be hard numbers. I'm sorry to disappoint you, but it's going to depend on each business and what their burn rate is. And so I'm going to explain that. So here's what you need to understand. You need to understand every month, how much does it cost to keep the lights on if no one's selling? It was a really good way of knowing this. Friggin' COVID. How much did it cost you during COVID to run?
Yep.
That was a harsh reality. And I go, how many months of pandemic could you endure? So how many months can you, with your cash, how many months can you operate your business if no one is selling? And that will tell you a lot. And if you can do 4 to 6, you're in excellent shape, in my opinion. In reality, a lot of people have less cash in the bank than that. And that's usually okay, because I also believe that if you're not deploying cash and reinvesting it at a certain point, you are, you're wasting resources that you can have to generate. So I'd say 3 to 6 is very good. I actually like to express it in terms of payrolls, if I'm being honest, because I like to say, how many payroll runs can I make? Because that's the biggest thing. And if you're in the business for the right reasons, it's like the last thing that you would ever sacrifice is payroll. You would sooner be working out of a shanty in a parking lot, but like you got to keep your guys, you got to keep them working because that's your business, right? You might downsize a little bit, but if you know my husband, he was the same. He was like, whatever I got to do to keep paying the guys, like I just got to keep them on payroll and endure this thing. They're relying on me. Their families are relying on me. They come to my Christmas party. Like, this is a family. This is an extension of a family. So you got to look at your payroll cost and say, how many payrolls do I have in the bank? That's a really good way of thinking about it, to say, if I have 8 payrolls, let's say you do 2 per month or even 3 per month if you're biweekly, and you say, I have 8 to 10 payrolls in the bank at any given point in time, that's okay. Maybe even more is great. But I like to say I could run this many payroll cycles if no new income came in, if this was it. And that's a good kind of a barometer to say, okay, that's how many pay cycles I could theoretically pay before anything bad happened. But those ways of thinking about it, though, instead of looking at your cash in the bank as like just a piggy bank that you can use, you have to be thinking about it. How many payrolls is that? How many rents is that? You know, think about the burn it's cost to run your business every single month. That's what we call monthly burn rate, and how many months of cash is in there. And that will tell you a lot about really how you should be managing it. If it's less than 3, be careful.
So let's look at end of the year and taxes, right? So what are some of the dumbest things that profitable owners will do at the end of the year to avoid paying taxes?
Okay. And I do want to answer Will's question. Actually, I realized I didn't answer that about paying yourself, because this is really important. One of the other things we look at with the burn rate is cash flow projection. So I've been mentioning cash flow a lot. What we actually do is we take the cash, the bank balance, the beginning of the week on a Monday morning, and then we map out everything that's coming in and going out this week. Not just your P&L, but like your credit card payments, your loan payments, everything else. And we work in the tax savings. So this goes into that too. We work in putting money into a savings account for taxes, high yield savings, putting money into the owner's accounts for distributions. It's all part of the master plan. So it's not reactive like, oh, when there's enough money, I guess I'll pay myself, which will never happen, because you'll always want to reinvest first and never want to take any money out. And if it's a part of the plan and it's on an auto transfer, and you know every second week of the month after this money comes in, I can take a 10K distribution every month. Great. It's all part of the plan. And I see what's going to happen. And it doesn't really stress me out because it's all part of this master plan I have for my cash. So working that in is key, and planning for that, and then planning for taxes, like you said. So when you're planning for taxes, there's just a lot of stuff that worry people. Like, if I make enough profit, I'm going to owe taxes. Yes, you are. But here's the thing. You can't necessarily eliminate all of your taxes every single year, but you can do a damn good job at, purchasing equipment and vehicles that you're already planning on purchasing. And you can actually take a depreciation deduction, which most people know about. And that is a massive help to lower your profit on paper for the sake of your taxes. And obviously, I actually think that to the point about cash flow, that most of the time the stress is because of the short notice of finding out you owe, and not necessarily always the amount. Like, if you have money set aside every single month to go toward taxes, it's way less stressful than getting an April 14th email from your accountant that's like, you owe $250,000. It's like, I don't think I would have minded setting aside $20K a month, but because I got a last minute just fire alarm that I owe $250,000, that stings. An unexpected outflow like that hurts. So I would give serious thought to how much of the stress is related to the urgency versus the amount. And you'll realize that that's actually the biggest pain point. But we do try to minimize the amount as much as possible.
Well, this, Shannon, and it's funny. I hear people, business owners around the country. And by the way, this is no knock on them. This is just where they're at in the journey. We finally gave Shannon a rest. Did you see that chug she just took? She practically shotgunned that Imperial. Dude, I told you, like, she's a rock star,
Well,
man.
she's got a lot of information and a lot of good information, and she's having to make up for
She
us.
just she practically stabbed it with a fork and chugged it. Yeah, look at her go. See, this is why I like Shannon. Not only
Oh my God.
I knew I liked Shannon on a few different reasons. Number one, we got on a conversation about tracking monthly depreciation and amortization, and we like every business needs to get on that. And then she chugs a beer, and I'm like, "This is my gal right here. We can get along. I dig this." So,
And now you need to come down to Costa Rica on a business deductible trip.
I know.
Oh, can we do a podcast from Costa Rica?
Dude,
You could. We got the equipment.
Well, we're already taking losses, on the podcast.
What's some more?
Yeah, what's another little bit? Anyway, we're not taking losses on the podcast, people. Thank you to our sponsors. We appreciate you. Any more sponsors, particularly Yingling, Coors, like we would love to have you guys fucking sponsor. I think we say it like every episode, like, well, some beer sponsor out there, please reach out to us.
We're waiting for the beer fairy to show up with a case.
We're already showing how many beers we drink per episode. All right, focus, Terry. Focus. All right, back to this. Okay, so this is actually because you've helped a lot of companies prepare their numbers, get everything ready, but also prepare them to exit.
Mm-hmm.
And this was a question actually from Jimmy, who rents an office from me here. And so this is off script. We did not have this. So Jimmy is exploring selling his company. And his question is how to navigate buyers wanting to do this asset sale versus stock sale. Because buyers want to do asset sales. Sellers want to do stock sale. And to optimize the value for the seller. And how to negotiate and mitigate some of that through strategy. And we may need to actually go back to helping people understand that because we know, Jimmy and I and you, this asset sale is a massive hit to them.
Yeah.
And if somebody's out there exploring it, they should know the difference. So let's break that down.
Yeah.
Tradies, running your small business can be demanding. You got suppliers you got to work with. You're managing crews. Hell, you're chasing sales. It's a lot to take in. Listen, if you want to grow your business, you got to stop working in it and you got to start working on it. So that's where my friends at Foundation Rescue Supply come in. You're not just getting foundation repair products and waterproofing products and air quality control products. With their nationwide distribution, you're getting a partner who knows how to help you scale. And that's why I use them. The Foundation Rescue Supply team has industry knowledge that'll help make your life easier. You get the tools, the trainings, the systems that you need to move the needle. You want your sales team to close more leads? Done, because they have the proven process for that. You need your crews to work smarter, not harder? Done. Their installation training will get you out there and rocking and rolling in the field. With Foundation Rescue Supply, you're not just buying materials here. You're buying a better business system that they have helped create. And you sell more, you install more, and you grow your team. So the bottom line is this. You get best industry pricing, you get field productivity on track, and you get more revenue out of everybody on your team. So this is your chance to step up, scale up, and thrive. If you are ready to make that happen, head to foundationrescuesupply.com, check out their catalog, and speak to my friends, their team, how you can take beyond the products with your company with Foundation Rescue Supply.
So the short answer to the question directly is, and this is where you're going to catch me where I don't know the exact code reference and no one really cares or will remember it if I said it, but there is a way that you can do a stock sale treatment for the seller and an asset sale treatment. You can get the best of both worlds through some type of election. So that's the answer. But let me explain stock sale and asset sale and why, if you're selling, you care about that and what it means for you. Because I would say that most of the time you're thinking about the sell side. So the main thing I would look at is, so when you have a company if you're a contractor, say foundation repair, waterproofing, whatever, you've got equipment, you've got vehicles, you've got assets on your books, most likely. You've got something that you're using to actually do the service and dig the dirt up. So what we have to do is look at what do we have in our books for all that. And let me guess, you probably took the accelerated depreciation on those. Probably. The problem is when you have an asset sale, what effectively is happening is they're going to bundle all your assets into a shopping cart and then go through the checkout line and say, okay, I need to assign a value to each of these assets that I'm buying them for. But on your books, you might have written them down to zero because you took all the depreciation in year one. So now they're worth nothing on the books. And so every dollar that you get paid for those assets is a gain. And even worse, you're actually recapturing, we call it, all that depreciation deduction you took, and now it's back to income on your tax return. No bueno. So now when you're selling all those assets, you're actually claiming a ton of income. And that becomes a problem for taxes because you're going to end up paying a lot more in taxes because you're going to have all these gains, all this other income that you're recapturing back in, and it's usually less favorable versus a stock sale, which is simply you're selling the interest in your company. So it's almost like a house. If you were selling your house and all of the individual furniture pieces in it, that's an asset sale. If you're simply saying, hey, here's just the keys, you're just buying the whole package and I'm not changing the locks. You just have access to that key now. You're now Shannon, like you now own this. You've assumed that. Great.
And sharpening them.
Mm-hmm. So it's really simple that it's just itemizing all your assets versus just giving you the keys to the whole house. And the difference though is that when you're selling, you want to just give the keys away because then you don't have all that recapture. You don't have to deal with all the asset values or anything like that. You can just be able to sell the stock in the company, recognize a smaller gain, and usually it's favorable to you tax-wise. If you're on the buy side, here's why they want an asset sale. Because then when they ring up all those assets individually, they get to bring them onto their books at that value and then depreciate all that in year one on their side. So then they get a massive tax deduction because they just spent a ton of money buying your business. They don't want to pay money in taxes. So now they're going to try to get that deduction. So they're going to try to claw that deduction over at your expense. So this is the game we play with the stock and asset sale, very, very high level. And so if you're looking at that, you want to try to find the most favorable way you can.
Now, Shannon, some of our listeners are going to watch this and they're actually going to gain useful information from you other than what they've gained from Will. So
actually,
a couple questions. Yeah, actually, a couple questions.
Hey, I know my role. We are the comic reliefs in this storyline. We're
that's your role, buddy. That's your role. What's the name of your podcast, and how can they get in contact with you to engage your services when they understand they need help?
Absolutely. Everything's called Keep What You Earn. So Keep What You Earn podcast, and I'm at keepwhatyouearn.com, as Will put it. I don't know how the hell I snatched that URL and that domain, but I did, and I'm grateful for it. So I just made everything under that because that's easy to remember. And that's really our mantra here. Keep what you earn.
I'm going to look up Drink What You Earn right after this. Don't you buy it. Sit on that domain after this.
And so in terms of, do you have a guest house or room down there in Costa Rica? Me and Will can we'll cohabitate. I'm fine being Big Spoon.
Yeah, total Big Spoon, Little Spoon situation going on here. We don't do that well.
100%.
Hey, you know what? Actually, I know Jason well enough. It'd probably be like Big Spoon, Medium Spoon, Little Spoon. It'll be a whole
Scared spoon in the middle.
It'll probably be less crowded than the bed we have with our dogs right now. So yeah.
Mm-hmm. That's right. Well, listen, Shannon, I love what you do.
Yes.
And I also love what you do for our people. And what I mean by that is our contractors. And you bring so much clarity to things that it's we talked a lot about ego today. So I appreciate that about you because you don't pull punches, but also you're not an asshole. You actually know what you're talking about.
That's the nicest thing someone said to me today.
I know. We're on the last 2 minutes of the podcast. There's a huge drop off right there, the last 3 minutes. So nobody's going to hear that. Sorry to your 3 listeners now. But anyway, appreciate you. Terry, I appreciate you being back in the studio, buddy.
Someone has to.
And to our 5 to 6 listeners out there, you know who you are. Appreciate you guys. And we will see you on another episode of Beers with Contractors. Peace.
And that's a wrap for today's episode of Beers with Contractors. We hope you enjoyed our chat as much as we did. Before we say our final goodbyes, a friendly reminder. Beers with Contractors encourages responsible drinking. If you choose to enjoy a beverage during our time together, please do so in moderation and only if you're of legal drinking age in your country or state. Furthermore, the advice and insights shared in this podcast are for informational purposes only. Always consult with professionals and experts in your field, and be sure to follow local laws and regulations regarding licensing and permits. We're here to help, entertain, and inspire, but your safety and compliance are important. So, as you head out into the world of construction and contracting, remember to build responsibly and make decisions that stand the test of time. Thanks for joining us today. We'll catch you on the next episode of Beers with Contractors. Until then, cheers to your success.